Good morning. I'm Remy Blair, and you're watching Market Movers, the opening bell live from the New York Stock Exchange. Well, Wall Street is in the red on Friday morning, and this comes after Trump announced 35% tariffs on Canada starting on August 1st. Now, it's been a week of new records for Wall Street, from the S&P 500 to Nvidia to Bitcoin, all-time highs despite fresh tariff threats from Trump. Now, Nvidia closed just above a $4 trillion market cap, and Bitcoin soaring well past 118,000, hitting yet another all-time high. Meanwhile, we saw Delta lift markets, jumping over 13% after restoring its guidance to start off earnings season. Meanwhile, in terms of the latest tariff headlines, Trump is imposing a 35% tariff on imports from Canada starting August 1st. The White House says goods that comply with the U.S.-Mexico-Canada agreement will be exempt, at least for now. And the move comes as talks between the two countries to reduce tariffs have stalled. Now, traders are eyeing potential trade deals with major partners like the EU and India, though this may impact chances of a deal with Canada. Now, Trump's been threatening various new tariffs this week, including a 50% rate on imports from Brazil. And as U.S. stocks see record highs, Trump took up. He posted, quote, tech stocks, industrial stocks, and the NASDAQ hitting all-time record highs. Crypto through the roof. It's up 47% since Trump tariffs, and USA is taking billions of dollars in tariffs. He also declared the country is now back. At the same time, the White House shared a meme featuring an angry panican slamming a window shut to hide all the green. This is a reference to strong markets. Now, the term panican, coined by Trump, refers to people he claims he sees as weak and stupid for overreacting to his tariff policies. While the markets are looking open on this Friday morning, so let's take a look at futures. Dow futures are off triple digits this morning, pulling back by 0.6%. As for NASDAQ futures, they're off by nearly half a percentage point. As for the S&P 500 in terms of futures, they're also lower by 0.5%. Now let's take a quick look at the 10-year yield. Right now, the 10-year is hovering right around the 4.38 level. As for crypto, we know that Bitcoin has been rallying overnight. This morning, we saw Bitcoin break through the 118,000 level. As for ETH, that crypto major is soaring as well, and it did cross the 3,000 level earlier. Now, in terms of precious metals, gold is up by over 1%, and this does come on the heels of new tariff threats. The precious metal is hanging right above the 33.60 level. As for energy, oil is up by about 1% as well, and is hovering above the $67 a barrel level. For more headlines, let's go across the trading floor to Jane King. Good morning, Jane.
Thanks, Remy. Here's a look at your Coin Street headlines. The U.S. Senate confirmed an ex-BitFury exec to lead the office of the Comptroller of the Currency banking regulator. Jonathan Gould will return to the OCC as Comptroller of the Currency to serve a 5-year term following his nomination by President Trump. Gould is expected to align with the Trump administration's friendlier approach to crypto. Stable coins have another win. Startup Agora secured a $50 million investment led by Paradigm. Agora was founded by Nick Van Eck, and it aims to boost adoption of its white label stablecoin platform with $50 million from Paradigm and Dragonfly. The company has already collaborated with crypto projects like Polygon to issue customized stablecoins and plans to expand those partnerships. Malta's cryptocurrency licensing process has come under scrutiny from the European Securities and Markets Authority. That's the European regulator that oversees crypto assets, known as MiCA. Specific attention is being paid to the island's fast-tracked authority of a certain unnamed crypto firm. Malta officials did not comment. And the New York Stock Exchange is launching an elite tech index. The NYSE Elite Tech 100 is scheduled to launch later this month. That will include technology leaders from all U.S. exchanges, update its composition more dynamically with quicker inclusion of IPOs, and focus on highly liquid and investable constituents. And that is the latest Coin Street headlines.
Let's get to the big story breakdown. A week of record highs this week, not just for the Nasdaq and S&P 500, but also for Bitcoin and Nvidia. For now, tariff uncertainty back in the spotlight as all eyes are on these record highs. Now, earlier this week, Nvidia CEO Jensen Huang announced he is set to meet with Trump at the White House. The meeting follows a historic milestone for Nvidia, the first company to close above a $4 trillion market cap. Well, joining me as we wrap up the week is Peter Tuchman, senior floor trader at TradeMa. So, Peter, happy Friday. What a week it's been.
They're panicking. That's what I heard.
I know,
right
yeah. Well, a lot of interesting terms that are not officially in the dictionary. So, first and foremost, what do you make of all this action?
You know what? I think it's fascinating. You know, the fact that the market is trading at record highs with all the look. Our attention was diverted for a little while with the war in the Middle East, right? Even though we know the biggest market mover over the last 3 months has been the tariffs, right? It took us down to the lows of April. Once the president told us to buy the market back, we were able to get back to really record highs once again. And even with all this pending and looming over the last number of days, because we are in Q3, we are in the beginning. I think there's a lot of money on the sidelines. People are playing catch up, right? And we've got earnings season coming up. I think what you just described in your opening session, it's going to be the first time we're seeing since last quarter where we're actually going to be able to give some guidance. Although, look, you described in the opening segment that tariffs are now going to be a big thing again, right? Obviously, he's coming out of the gate with a little more of that bullying feeling to him, and he quotes. I guess when people were coining him as the taco trade, he's coming back at everybody with the panicking, and I love it. Look, the goalposts are even, right? The landscape, everybody gets to play in the same playground here. So the action is extraordinary. The market breadth is solid. We did hit all-time record highs across the board yesterday, which is amazing. And now this pullback is surely a function of the fact that Mr. Trump is re-engaging the tariff thing, that, laying it out. If you think back, February 19th was the first day that the market started to sell off when he said, I'm imposing a 25% tariff on Canada and Mexico. Once again, it's been a little while since he did that, but today, 35% on Canada and Mexico, and, unless they do this and that. So we're going to see a little bit of push and pull, but
well, Peter,
more to be revealed.
Yeah, and I think a lot of words to add to the dictionary, and also a lot of acronyms here, whether we're talking about FOMO or MOMO, and that is the momentum trade. So I do want to take a look at Nvidia, especially because earlier this year we had that concern about DeepSeek and also the implications of trading partners. But we know Nvidia breaking that $4 trillion mark. What does this mean going forward? And is it all based on AI?
Well, no. I mean, I think there's a massive industrial revolution within the AI space. So, yes, it is based on AI, but it's also there's the second and third derivative of that space. There are a lot of other smaller stocks that you're seeing, small cap, mid cap stocks in the AI space that are going to play where there is opportunity. A lot of people are going to look at Nvidia. If you look at Nvidia from February 2023, it was a $108 stock. February 2024, it was a $795 stock. It then went in the second quarter. It went up to 1,100, split 10 for 1, $50 billion buyback, and besides the fact that we had the DeepSeek and then the president outlawed Nvidia from selling certain old chips, the stock is literally the leading, it's best of breed, right? Jensen Huang is obviously the best in the AI space. He knows how to position himself. When he doesn't get what he wants, he shows up at the White House. He ends up going to Saudi Arabia. So, that's what I like. There's a certain proactiveness that's super important, and it's being reflected in the stock and people's perceptions of it. $4 trillion is extraordinary. While I think you're seeing a lot of stocks that are the old flavors of the moment, like Apple, which were best of breed for a while, they're pulling back because people are not being as proactive. Jensen Huang is stepping up. He's doing what needs to be done, and he's pivoted too. There have been bumps in the road and sort of pebbles in the shoe for Nvidia, but at the end of the day, they keep forging on, and they're doing the right thing. So the price action is extraordinary.
Yeah, and Peter, another record high for Bitcoin earlier this morning, clearing the 118,000 level, because yesterday, while I was keeping a close eye on that crypto major, we saw it break above 113, and overnight we saw 116 this morning above 100. 118. So where do we go from here?
Well, you mentioned the momentum trade. You know, look, I'm a trader. I teach trading, right? So we have the Wall Street Global Trading Academy. One of our biggest trades is the momentum trade. That is basically when the market is sort of flatlining for a certain amount of time, and it either breaks to the upside or breaks to the downside. That's a momentum trade. That's basically everyone waiting around where the next move is going to be. And look, you're seeing it with Bitcoin. You're seeing it with Nvidia too. You know, people are wondering, do I pay the highs? But if today's highs are tomorrow's lows, then it would have been a good trade. So, you know, yesterday was an extraordinary day. You had NASDAQ, you had S&P, and you had the Dow hitting intraday record highs and closing record highs, and Bitcoin, right? So if anyone ever thought Bitcoin was a hedge to the market, they're wrong. It's been trading with the market, and I think you're seeing a lot of momentum there. People are looking for immediate return on investments. They're seeing it in the market, they're seeing it in crypto, and they're seeing it surely in the tech sector.
Yeah, and Peter, it is Friday, but of course we have a big week ahead of us next week because we get key economic data on the U.S., whether we're talking about inflation or retail sales figures. But in addition to that, it is the official kickoff to earnings season. So what are you paying attention to as we gear up for the upcoming week?
So look, the last earnings season, one of the most problematic things were that you had in GM, United Airlines, Ford, were the inability for the companies to show guidance. There was so much uncertainty around the tariff question that they didn't know what the cost of goods sold were. They were not able to do that. Even Jamie Dimon came out and said, you know, we are in a quandary here. We don't know what to do. The last time that happened was during COVID. Right back November 2021 was the first time, and surely in 50 years, where the CEO of the largest bank in the world came across the tape and said, I am not able to give guidance for this company going forward because of all the certainty around COVID. Then he did it now around the tariffs. So you know what, I'm watching tariffs. I mean, that's obviously starting to unfold and evolve once again. We're going to see where that goes. Is that going to put a lot of stress on this market going forward? Next week, a lot of economic data. The Fed is, the Fed is the next thing that we're going to have to keep our eyes on. Are we? You mentioned just this morning on the opening segment that you were able, what company what it was, you were able to give guidance, right? So one of the reasons we are where we are in this market right now is that earnings were good. Even without guidance, we've had some strong growth. And so if that stays solid and we get a little less uncertainty around the tariffs, then we're going to be able to give guidance. And I think then we should be able to get higher from here.
Okay, Peter, as always, thank you so much for joining me as we wrap up the week, and I'll see you back bright and early on Monday. Have a great weekend.
Happy trading, everybody.
Coming up next, Remy Blair is joined by Polly Jean Harrison, features editor of the FinTech Times, with the latest from Europe and the Middle East. Market Movers, the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell. Let's check in on fintech headlines from Europe and the Middle East with Polly Jean Harrison, features editor of the FinTech Times. Good morning, Polly. Great to have you back on the show. So let's start out by looking at Revolut. I understand that the company has introduced new stocks and ETFs to expand investment options for customers in the UK. So tell us a little bit more about the launch.
Hello, Remy. Great to be back on the show. So British neobank Revolut has launched a new stocks and shares ISA and UK-listed ETFs as part of its efforts to expand investment options for their UK customers. So through the new stocks and shares ISA, which will be available in the coming weeks, Revolut customers can save and invest up to £20,000 per year tax-free. And Revolut is also now offering access to hundreds of ETFs, including Vanguard, BlackRock, enabling customers to begin investing with as little as £1. So this launch comes as Revolut is really aiming to normalise investing, recognising that Brits have historically had a lower appetite for investing, potentially missing out on opportunities to build long-term wealth. So with this new product suite, the neobank hopes to make it more accessible to trade, either as part of a regular trading account or with a tax-efficient wrapper. So these launches really add to Revolut's existing investment options, which already enable customers to invest in homegrown UK and popular European and US companies as well. So Revolut is also offering one-off commission-free order per month to every customer, and as well as no monthly subscription fees, which is hoping it's going to make investing a lot more affordable and accessible. So this is hugely exciting, as you know. I think it's really great to see Revolut doing this for their customers, and I think it's really going to help people come in and just start to understand a little bit more about investing and dip their toe into investing, especially in the economy that we kind of have at the moment. So yeah, I'm super excited to see where this goes, and I'm super excited to see how, you know, this is taken up by Revolut and all their customers. It's a really great thing for sure.
Yeah, and Polly, I do want to get your take on the latest partnership with Dex. So that is a bookkeeping provider, and they're partnering with global payments platform Airwallex, and they're set to roll out a new payment solution later this year. So tell us about this partnership.
Yeah, absolutely. So Dex and Airwallex are really hoping to work together to launch Dex Payments. And this is an integrated payment solution within the Dex platform, completing the accounts payable workflow in Dex and offering full automation from invoice upload through to payment. So this partnership is really bringing together two fintechs with a shared vision to modernize financial workflows for SMBs and their accounting and bookkeeping partners. So by integrating Airwallex's payments infrastructure into Dex's automation platform, Dex Payments is really single solution for managing supplier and expense payments, payroll, as well as an easier way to get paid directly from an invoice. So this launch is really coming as SMBs are facing increasingly complex operations. So in the UK alone, nearly half of small business invoices are being paid late, waiting an average of 46 days to get paid and losing time chasing those overdue payments. So recognizing this impact on cash flow and business viability, this is really what Dex Payments is hoping to achieve. And it's also going to be introducing enhanced security as well by verifying suppliers and payment details using data held by Dex, giving users greater confidence that suppliers are paid correctly and effortlessly. So again, this is a really exciting thing to happen. It's always great to see new payment solutions come in, especially when it's something that is benefiting small businesses, again, in the sort of uncertain economy that we have in the UK at the moment. So it'll be really interesting to see how this goes, and I'm really excited to see what's next for Dex and Airwallex working together.
Okay, Polly, well, we will have to leave it there, but thank you for bringing us the latest headlines from across the Atlantic. Have a great weekend.
Thanks, Remy. See you next time.
Coming up next, Remy Blair is joined by David Stryzewski, FintechTV contributor and CEO of Sound Planning Group. Market Movers, the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell live from the New York Stock Exchange. Well, the bulls have taken charge despite the uncertainty we've seen in 2025 and some ominous Black Monday predictions earlier this year. Not to be mentioned here on the floor, we're seeing the major stock averages hit closing and intraday record highs. BlackRock, Broadcom, Bitcoin, Coinbase, Microsoft, Nvidia, Robinhood, and the S&P 500 all hitting record highs this week. And all of this without a Fed rate cut. So without further ado, joining me is Dave Strzeski, FintechTV contributor and CEO of Sound Planning Group. David, happy Friday. Great to have you here. Thanks for joining me.
Thank you. Great to be with you, Remy.
Well, first and foremost, let's start out by looking at that Bitcoin chart, because overnight we saw Bitcoin clear 113, 116, and this morning 118. So what do you make of what we're seeing?
I mean, it's just getting started. It's no question. There's been a lot of shorts on the market trying to keep Bitcoin below 100,000. I think that you've been just watching big institutions allocate in. You've been watching them, just kind of do the pump and dump thing, which is what I was concerned about when the ETF came. But now I think that we're off to the races. We're going to be seeing new highs here. And I think ultimately, Remy, that we're seeing the beginning of altcoin season. And we're really about to see a maturation take place as institutional money is now coming into this space where maybe you and I were speculating in our allocations before, will this work and will this not work? It's still this real big question. Now we're looking at, this is a real thing. Real businesses are really allocating into it, following the Michael Saylor model, and I think that we're going to be seeing a lot more.
Yeah, and David, you bring up a great point here, because here we are as we kick off the month of July. We have Crypto Week taking place in Washington, D.C., but you mentioned altcoins. So for viewers who are not as familiar of the implications here, tell us what's happening in altcoins.
Okay, so we've got like Bitcoin, and then like every other coin is basically considered an altcoin, right? All right, so little different models here in altcoins. Now, a couple things that I think are really important. We need real world applications in order to change our lives, to bring this wonderful technology that can scale, bring lower cost, faster solutions to us that are not going to be able to be counterfeited. And so these altcoins give us the ability to have function. Think about the apps on your phone, how we might transact at a grocery store, how we might engage with music in the future. And so there's so many different pieces of technology right now that are just starting to come out. And some of these alternative coins are really like the algorithms that we're going to be seeing businesses run on in the future. And so I really like companies like Ethereum, of course, is a big name out there. Probably going to see 4,000 Ethereum before the end of the year. But one coin that I really like, and it's doing exceptional here this morning, is Cardano, ADA, which is very similar to Ethereum, kind of like a cousin here as far as the functionality goes, but I think we're still looking at about 75 cents right now. So in comparison to $2,500, 75 cents probably has a little higher to go.
Yeah, and speaking of prices, I had to look at the 52-week low for Bitcoin just so I could feel a little bit more FOMO here, but it's hard to believe how long we've come since the 52-week low below 50,000.
Right.
But while we're talking about records, I do want to get your take on what we're seeing for the equity markets. We saw the S&P 500, NASDAQ hit new record highs yet once again. So what's going on here? Is it just momentum?
The world's pretty excited about the big, beautiful bill. I like to call it the Tax Cuts and Jobs Act 2.0. It has actually created the single greatest opportunity in any of our adult lifetimes to reduce or eliminate taxes. This is what we want to pay attention to. But this also brings, more people money to the hustle economy. Those that are here and working overtime or getting tax on tips because they take a second job, they're getting boosted. So I think people are looking at this and saying this is really good for the average consumer if our GDP is still 70% based upon their consumption, their activity, and what they're doing. So this is just rewarding. I think we're seeing the market respond from that.
Yeah, and next week, as we look ahead, we'll see where we close on this Friday. But of course, we get inflation figures next week, not to mention the official start to earnings season.
Right.
And we got a sneak peek yesterday with Delta reinstating their guidance as well. But what are your expectations, first and foremost, for earnings season?
This earnings season, I think, is going to be a mixed bag. We've seen some companies do a little bit better, be better allocators. The tariff conversation has really been confusing. So if you're a business that's tied to that, there might be some struggles right now. If you're a business that is domestic and really positioned right in this economy, I think that you're going to see some real wins. Those that are embracing AI are not as easy to figure out off the headline, but as we begin to see these companies progress and allocate in these new technologies, I think that you're going to see earnings actually get better and better because of supply side economics improving. But that means probably a few fewer jobs, but more productivity per individual.
Yeah, and we can't have a conversation here about AI without mentioning NVIDIA, which cleared the $4 trillion mark and actually closed above that. So given all the concerns about artificial intelligence, especially given some of the geopolitical tensions, what do you think is in the future when it comes to not just NVIDIA, but the entire sector?
Okay. With AI, we've got a double-edged sword here. So let me just mention a couple of positives. Pharmaceuticals should be really, really improved with AI. We can kind of map this stuff out faster to market. We're going to be able to mine a lot more efficiently and effectively because we know what's in the ground. We have an idea what's going on under the surface of the earth, if you will, a little bit more effectively. I think that you're going to see AI become your doctor, though. And primary care physicians, I believe it's 65% of them are over the age of 65 right now. And so AI can actually pass the test and get 100% on the test to become a doctor where your doctor couldn't get it on their best day. And so here's the reality. It's a speed reader and it's going to do some really wonderful things. Now there's some challenges to it. Can it rip off you and I and our personalities and our voices? Yes. So there could be some cybercrime stuff that happens. I think people's wallets are going to get hacked. I think people use way too many passwords in common, and we're going to find out how we might be a little bit more open than we might have thought previously. So I'm excited about AI. I'm excited about technology. Really, I think the robots. I'll say this much: for $100 a month, I get to have a chauffeur in my Tesla for only $100. How much would it cost for me to hire a chauffeur to drive me around quite like that well? Not $100, it'd be a lot higher, so it brings the price down.
Yeah, with this AI technology, I do have a few concerns when it comes to surgery, but perhaps regarding a chauffeur, that is a possibility. So finally, before I let you go, I do want to get your take on what we've been seeing across commodities this week, especially with copper. Yeah,
obviously the big copper move was to say, hey, we do not have copper as a nation. This is a critical mineral. We've got them in our houses. We've got to connect circuits. I'll mention one other in commodities, and that is that silver hit $38 this morning. Okay, I'm a really big silver fan, and the reason why is because if you're going to make semiconductors, you can't just do that with copper. You've got to do it with silver. We need clean electricity. We need really strong current. You have to do that with silver. You can't electrify an economy. You can't do NVIDIA unless we've got those assets in place. So you can't print it. You got to mine it.
Okay, David, well, we will have to leave it there as we're approaching the open of the market here at the New York Stock Exchange. As always, great to have you here. Thank you for joining me.
Pleasure's mine. Thank you, Remy.
And ringing the opening bell here at the New York Stock Exchange this morning is FIFA and DAZN in honor of the 2025 FIFA World Cup Final. Take a look at the podium of the opening bell as we kick off the trading session. Well, that was the ringing of the opening bell to kick off Friday's trading session. Now, first, let's get you caught up to speed on some facts about today's date. Now, today is 7-Eleven Day, and that means free Slurpees from 7-Eleven. Now, 7-Eleven is a privately global convenience store chain that originated in 1927 in Dallas, Texas, initially operating as the Southland Ice Company. It was Originally called Totems stores before being renamed 7-Eleven in 46 to reflect its extending hours of operation from 7 a.m. to 11 p.m., which was unusual at that time. And while it's not publicly traded, the company is owned by the Japanese conglomerate 7&I Holdings, which is publicly traded on the Tokyo Stock Exchange and as ADRs in the U.S. Anyway, it's a Friday in July, a perfect time to cheat your diet and enjoy a free. And now let's check to see how markets have opened on this Friday morning, starting out with the Dow Industrials. We are looking at that index in negative territory and pulling back by triple digits this morning. We are looking at the Nasdaq also opening in negative territory as well. The Nasdaq Composite Index is down by a little over 1/4 percentage point. As for the S&P 500 on this Friday morning, we are looking at that index in the red as well, down by about a little over 0.4%. As for the NYSE Composite Index, which tracks all companies listed here at the New York Stock Exchange, that has opened in negative territory as well and is pulling back by a little over 0.5 percentage point.
Coming up next, Remy Blair is joined by Chris Whalen, chairman of Whalen Global Advisors. Market movers the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell live from the New York Stock Exchange. Well, the rally in financials is gaining momentum. This comes ahead of earnings season and on the heels of the Fed Reserve's stress test. Now, banks are expected to boost share buybacks, but the outlook does remain complex, and Trump's handling of the Fed as well as the dollar could trigger market turmoil, especially if spending keeps the economy running hot and fuels inflation. Of course, all eyes are on the political changes in D.C. and higher valuations. So which consumer-focused biggest stocks will thrive as rates come down and loan volumes increase. Well, joining me here at the New York Stock Exchange is Chris Whalen, chairman of Whalen Global Advisors. So Chris, welcome. Thank you so much for joining me. So first and foremost, I know that you focus on debt. So tell me about money, debt, and the American dream. What is happening there?
Well, we have lots of debt, but looking at the market, you'd think we don't have enough. Because every time the treasuries get up anywhere close to 5%, the 10-year, it trades right back down. We still don't have a consumer recession. We have a bit of a mess in commercial real estate and credit. You've heard about private equity, of course.
Oh, yeah.
But the consumer is still relatively intact. The bottom quartile, if you will, the last 25% is hurting, but that's been the case for years. The rest is fine. If you look at the banks, there's no default activity in credit cards, mortgages, whatever.
And I know you have very strong as well as the financials here. So first and foremost, we're seeing record highs for the major U.S. stock averages. We saw the S&P 500, NASDAQ hit record highs, and coming in this morning, we saw crypto major Bitcoin clear 118,000, right? So that is significant. But when we're talking about money, debt, the American dream, what is happening to the American dream, and why does all of this affect that dream?
Well, the American dream is under attack because of inflation, because Washington cannot deal with the budget deficit. It flows through. So every time the market gets into a problem like March 2020 and the Fed has to ride to the rescue, the inflation flows through the banks. The banking system expanded enormously. So that's really the issue. I think until we get the budget deficit under control, consumers are going to suffer with inflation. And it's a political problem, as you can see. We're about to elect a Marxist-Leninist here in New York City. Funny as that may seem, right?
Yeah.
But people are hurting. They can't make ends meet. I think we should be relocating people out of New York City because they can't afford to live here.
Yeah, and we know when it comes to the cost of living, we have seen that inch higher. And there's so many reasons for this. And many American consumers may be asking when are prices actually going to be coming down. But as we mentioned, the nation's capital, Washington, D.C., we get inflation figures out next week. And between politics, between the Oval Office and the Federal Reserve, there is a lot going on. So what do you think needs to happen?
I think the Fed should have cut rates last year when they had a chance. But it's interesting, Governor Waller was out today saying they're going to continue shrinking the balance sheet. That's contractionary. So even if they cut Fed funds next month, if they continue to shrink the balance sheet for the rest of the year, I think that's a net negative for the economy. We publish an index on the top 100 banks. They're outperforming Bitcoin by a considerable margin. Why? Inflation. The stock market continues to be the best inflation hedge you can get. And unfortunately, I think it's going to go higher, which means that inflation is probably headed higher too this year.
Yeah, and I can't believe I haven't asked you yet, but regarding tariffs, there's still tariff uncertainties, but here we are. We're looking at the key levels for the S&P 500 after clearing record highs. So with everything happening with tariffs, this uncertainty, how will this play out and how will it really affect inflation, Chris?
I don't think the Fed should be paying attention to tariffs at all. Tariffs are a fiscal issue. If they do, in fact, result in inflation, let's wait till we see the numbers. But all of this pontification and this and that that we hear from Fed governors when they're out in the media, they don't know anything. There's been a couple who've actually said that. They said there is no visible effect yet. I think it was Musalam who said that yesterday. So to me, let's wait for it because I don't think the impact of tariffs is clear at all. The Fed is taking their eye off the ball. Why? Commercial. The big question mark for banks, non-banks, I don't care. Blackstone is about commercial credit right now. I think the Fed was way late. President Trump is right. They should have cut earlier.
And we can have an entire hour-long discussion on policy, but you mentioned the difference between fiscal, monetary, and also economic. So why does it matter to understand the differences between all of these different types of policies?
Monetary policy has no impact on fiscal policy. The two are totally different realms. You could argue that fiscal policy needs to improve in this country, but that's not the Fed's job. They need to focus on what they control. They hope they control the short end of the market. They don't control the 10-year and the 30-year. And I think it was very interesting that Scott Bessent, the Treasury Secretary, has now said he's going to focus on issuing T-bills, which is what Janet Yellen was saying, right? So in a sense, nothing's changed. We are increasingly constrained in the United States, and yet none of our political leaders want to admit it. Eventually they will.
And, you know, when we're talking about the changings of the guards in the Federal Reserve, one area that I do want to ask you about is the FX market and currency, in particular, the U.S. dollar. So here we are, of course, we're looking at outperformance in terms of the equity averages outside of the U.S. But what about the U.S. dollar and the role that it plays? What do you expect to see for the currency?
Well, the dollar is pretty close to the lows for Trump 1. I think the weak dollar is actually helping stocks right now. When the dollar falls by a certain percentage, you're going to see speculative capital flows come back in. And I think that's one reason why we've been hitting all-time highs. Will the dollar weaken further? I think it will. You're probably going to see a rally in the near term, but you know, next year, for example, if they don't do anything about the budget deficit, then the Treasury's out there borrowing $3-4 trillion, then I think the dollar's going to go lower. I've been telling my readers, gold.
And gold. So earlier this year, we saw gold skyrocket to new record highs. It is something that we're watching. Commodities overall, we're continuing to keep our eyes on. But between the gold, the U.S. currency, and of course, we have earnings season coming up with the financials reporting next week to kick off the official season. What matters?
I think gold is a long-term trade. I think with financials, as long as credit doesn't get particularly ugly, they're going to continue to perform. Why? Because managers want to own them. The earnings aren't great, and the thing that worries me, Remy, is that the loan yields and also deposit yields are falling. That means that there's no demand for credit. So when you're at Jay Powell's seat, what should you be worried about, right? You should be worried about deflation right now. And I think that's a problem for the street. When I see that Jamie Dimon wants to return more capital because he can't use it in his business, I worry about that.
And finally, before I let you go, I want to ask you one last question here. So the Fed Reserve stress test came and went, and of course, in terms of headline news, we saw that the focus was on buybacks, but what are you focusing on and why?
The stress tests to me are only interesting because you want to look at the stress number for each bank. That tells you what the Fed's worried about. Of course, people want to buy back more stock because they don't need it. You see that across the industry. But I think that ultimately the banks are going to be a reasonably good play. They're going to return a lot of capital. Dividends are going to go up for a while. They're going to return to where they were before the Biden administration. And then after that, I think they're going to have to come down because credit is going to be an increasing issue next year.
Okay, Chris, well, we will have to leave it there, but great to have you on the show and look forward to speaking with you again. Thank you so much.
Coming up next, Remy Blair with today's tweet of the day. Market movers, the opening bell. We'll be right back.
I don't think he wants to share XII
No,
on the public
because
sphere.
well, there's so many reasons why he wouldn't, why it would be stupid to fold it in. I know people want to pump their own bags and stuff, but you have to understand, for him to protect himself, he needs to hold the crown jewel to himself and not expose it to a corrupt board. We already last weekend, we had so many people crying from the hilltops, take him out of the company, board, get to work, remove Elon Musk. Can you imagine he folds XAI in and he says something on Twitter and then the board flick him? He's toast. He has to keep the crown jewel to himself.
Yeah.
Everybody,
not that I think the board would, but you completely.
You never know. Be
right.
paranoid, everybody. Be paranoid in this crazy world. Jeff, what do you think of this rant we are on?
No, they should be merged, and he should structure the company in a way where he'd have majority voting, where that can't happen, or it'd be very difficult. Unless he's gone.
You think they should merge?
Self-described, he's gone crazy. Absolutely.
I don't think they need to merge it. I think there's ways to get him to get 25% share voting control without actually having a merger, but share ownership, right? So Tesla has a big chunk of XAI without having to own it or, be part of it.
Welcome back to Market Movers, the opening bell live from the New York Stock Exchange. Well, the price of copper hit a record high this week, and it's not just happening in a vacuum. Now, markets are reacting to Trump's new 50% tariff plan on the metal set to kick in August 1st. And ahead of earnings season, U.S. equities hit new record highs this week with the S&P 500 and NASDAQ hitting all-time highs. So what does this signal about inflation, trade tensions, not to mention investor sentiment? Well, joining me live here at the New York Stock Exchange is Steve Lawrence, Chief Investment Officer at Balfour Capital Group. So Steve, great to have you here. Thank you so much for joining me.
Well, always a pleasure to be here, and I'm really excited to talk to the viewers.
Yeah, and first and foremost, I think it's important to take a pause pause right here because, yes, we're looking at U.S. stocks in the red on this Friday morning, but that huge run up to record highs for the NASDAQ, S&P 500, not to mention the highs we're seeing on an intraday level for the Dow. So explain to us what's happening underneath the surface.
Okay, what I see happening is this. Obviously, the market is going to come off a little bit. It's going to, you know, and I maintain a very bullish position on the market, even though interest rates will go higher here. I mean, I'm in the camp of a Jamie Dimon, that rates will go higher, and you're seeing that, but you're also seeing growth. Okay, what I think the public doesn't realize, like copper. Copper is a very, very important commodity for growth. You can't build any infrastructure without copper. It's the DNA of building. So I think the public needs to realize that commodities are bullish, and it's understanding how to be diversified with understanding the risk reward.
Yeah, I think diversification is a key word here. And when we're looking at the stock averages, as well as NVIDIA, not to mention copper and Bitcoin hitting new records here, we're looking at prices that are expensive. So tell us about some of the interesting spreads and what's happening there.
Okay, one of the things that you'll see is you're going to see new relationships develop. Okay, so what's the relationship between copper, a 2-year note, 5 currencies, and 3 ETFs? Okay, so new relationships are developing in the market. And one of the things that you'll see with the BTC and all the alternatives is how they're grabbing traction into the market in 2 aspects. Number 1 is the ETF aspects, and number 2 is the physical aspect of the coin itself. So I think you're going to see a lot of long-term growth, and the public needs to understand, all right, that there has to be retracements. Okay, it's not about day trading. It's about getting into a position, all right, what you can afford and not afford, monetarily and from a risk point of view. I mean, take a look at Oracle. I mean, Oracle is just taken off. I mean, but Larry Ellison and Safra Catz, they're brilliant people, without question. Okay, and you're seeing even a day like today. Look at the investment that Goldman Sachs made in AI.
Yeah,
that's pretty impressive.
Very interesting story here, because when it comes to Goldman Sachs, that's a name that we all pay attention to, whether we're looking at their analysis, their price targets for the S&P 500, but in particular when it comes to that AI story, there are a lot of concerns about how AI is going to affect the labor market and what humans play in terms of a role. So where do we go from here, and do you think that they are the pioneers when it comes to trading with AI?
They've always been the pioneers, and when they've made mistakes, okay, like Marcus, they made a mistake. You know, everyone's entitled to make a bad investment, even Goldman. All right, but the point is, when you look at Goldman, and when you look at BlackRock, and when you look at JP Morgan, where are their investments really going? Within their own people, by utilizing the AI, it'll make the company much more efficient, but at the same time, new economies are going to, they are being created.
And do you trust AI for, say, surgery, driving, in addition to sophisticated trading? Or not yet?
You know, that's a really tough question, and for me personally, Ronald Reagan used to say this: trust and verify.
Yes, okay? I think that verify part is key.
Like anything else, you know, you can't go into something saying, oh, it's the end of the world. Trust and verify. All right, so have your own comfort level with anything that you do.
Yeah, and of course, as we're seeing lofty levels, as these names, these indexes hit new record highs, there's a reason for this, whether we're talking about momentum or even FOMO. But tell us about the tailwinds.
Like anything else, it's so based on psychology. All right, it's the sentiment what drives the market. So it's not if the market will come off 2-3%. 4%, but does that mean it's a sell, that it's going? Absolutely not. All right, but the consumer and the public gets nervous when they see that. But what we've seen, that the public is actually buying the dips. Okay, and they've created almost a new economy in that. When you look at companies like eToro, they've created new economies. Okay, E-Trade is no minimum. It's a new economy that they're creating. And you just saw today, okay, Flutter and DraftKings. Okay, so all kinds of new economies are being created, and that's what the public needs to realize. But take it in one step at a time.
Yeah, and finally, before I let you go, we'll keep an eye on all the new economies that pop up. But one thing that has been put to the sidelines right now is geopolitical risk. But we know that that will be an ongoing concern. So how are you factoring everything in the second half?
Listen, the geopolitical drama story is a story, okay? It's something that the world has to accept. All right, so it's how you read the tea leaves. It's a lot of negotiation, it's a lot of saber rattling, but at the end of the day, what is the world actually saying? We're all connected, whether you want to accept it or not. The banking system is connected, the fiat currency system is connected, everything is connected.
Yeah, and
it's
I think
like
that's
the human
important.
body. I mean, it's your fingers connected to your wrist. It's the same thing.
Yeah, and I think that's important to consider, especially given all the headlines out there. So finally, ahead of earnings season, before I let you go, what are you bullish on and what are you bearish on?
Okay, I'm bullish on energy, fossil, oil. We still need it. Okay, and it is what it is. Okay, we need it. Okay. I'm bearish on certain aspects of ESG. All right, certain aspects of it. It's a loaded question, meaning there's always going to be any sector when a stock doesn't perform. Unfortunately, I am bearish on some big, large retailers, like the JCPenney's of the world. I mean, Kohl's. I mean, it's terrible. Okay, all right, but on the bullish side, you're seeing companies like Walmart who are just that good at what they do, and they've been through the cycles. You know, the difference between a Walmart and an Amazon is time. Walmart has been through inflation, been around for a long time. They're not getting worse. They're getting smarter.
And Alan, speaking of which, Steve, thank you so much for joining me. And I think the moral of the story here is that everything is connected. So I appreciate your time. Thank you so much for joining me today.
Thank you for having me.
My pleasure. Okay. And that does wrap it up for Market Movers, the opening bell live from the New York Stock Exchange. Thank you so much for watching and have a great weekend.